Hi guys, first of all, my apologies for being away for a couple of days. I've just had quite a busy one, to be honest, and it's not related to how the market has been performing because there's always something to look into the market, especially when you're looking at so many volatile and illiquid cryptocurrencies. So today, as requested from one of our subscribers, I'm going to analyze REEF. There's no particular reason why I chose this one over some others, apart from a technical perspective, of course. I think it's just at a level where we should be looking at it because we can expect some interesting developments over the next few weeks, and after that, we could be really heading to fresh highs. So I will skip the fundamental part. Yes, I'm not going to go into coin market market cap even, and we'll just go straight to what we do. Okay, and this is change to logarithmic chart. Well, we need to take into account this all-time high over here, which is was at the first exchange day, I would say. So you can understand that this is wave one. Since we're working on the 1 hour chart, I think it will, okay, intermediate is gonna take a while. Yeah, so it should be fine. So you can imagine wave three, and then we're gonna get 4 and 5 above the previous high of, this is the wave one, yeah. Oops, I think I missed this, the 0.15 cents. If of course the scenario that we're going to look at is going to turn out being what we think it will. Okay, regression channel. Yeah, this is our Fibonacci regression channel, of course, not Fibonacci, just normal regression channel, but obviously in the logarithmic scale, which is a bit harder to draw, to be honest, but it's okay. I'm getting used to it. So you can clearly see what a nice symmetrical structure we've got here on the upside. Yeah, which clearly makes this a 1, 2, 3, 4, and a 5, right? But because we still need to take into consideration that we are in wave three, and we are in the beginning of wave three. You know, wave three has to end above wave one. That said, now it means that we're gonna go for wave one over here, then 2, 3, 4, and 5 in the minor degree. Yeah, that makes sense to you, right? So we're going to get 3, 4, and 5, and then 4 and 5. We're going to see the levels once we look at the shorter term a little bit further, a little bit closer. Yeah, which that means, of course, that this is our wave one and wave two and wave three and wave four and wave five in the minute degree. This is in 1 degree lower. Okay, now obviously this is a clear 1, 2, 3, 4, and 5. I'm not going to go into that. Over here we have a correction. What is important to look is how deep the correction has been. If we draw our Fibonacci retracement here in wave one, we can see that this is a 50 Fibonacci retracement. Usually waves, the depth, the rule of alternation says that when we have a deep in wave two, we have a shallow move on wave four, and the other way around. It's also the same when we take it on a 2D dimension. So in time-wise, right? So if something lasts like 10 days, then the other one might last 20 or whatever. Now, we get the 50. It's okay to assume that that 50 is going to be another 50 up here, which to us, because we want to take also wave 3 and 4, right? Which is, to us, means that, oh, look at this, we could have ended this correction over here, we're moving up. But because of this move over here, to me, it does not look impulsive, it looks corrective. I think we're going to remain a little bit here for a little bit longer, okay? If we take now the Fibonacci extension to see wave one and wave three, whether actually wave one ended at a good level, there you go. We ended exactly at the 200 Fibonacci extension, which to me indicates, yes, that wave five, the green one, yeah, is going to extend. If we did the two, what was it? The two over here, yeah, it means that wave three is going to most likely be the 300 Fibonacci extension. This is at 0.079, okay? Now, this is what I'm looking at this wave one minor or wave one trend, which actually fits very well with this scenario over here. We're looking at probably the 21st of February or so. We don't know if this is going to be the case, right? This is just, of course, some sort of projection that is well educated. Now, what I'm looking at this particular level, okay, and let's just assume this is an impulse. We're not going to go into through the waves. What I am assuming is I'm assuming since this correction took us there 171 bars, I want to see that correction. Obviously, it's got we are 148, right? Since I don't think we're going to be done now, I think we're going to go over 170, which means we're probably going to have to go. Well, let's consider 0.5 or 73, that's around 8, so it's about 25, I would say. Yeah, 210, 25, but this obviously means that if we're going to do that, yeah, then we're going to get the end of this correction in 4, the date that we expect this move to meet wave 1 up here, so 0.79. So you can imagine that it's a bit mixed forecast. However, I need to also take into account both scenarios, right? So it could be a case where we're going to see it as becoming some sort of triangle, perhaps, okay, and we're going to end down here first, yes, not necessarily below 0.35 because we are still at 50 Fibonacci, yes. We're probably going to do a false break and then move higher, or guys, we're going to just range a little bit longer. Okay, we're going to end a lower, like before that, missing this level perhaps, very likely, and then start moving higher to take out around the end of February. Okay, so end of February, we're either going to have a low, okay, closer to the end, or we're going to have a high. In either case, the continuation on the upside is going to be the same. If we assume that we end indeed at 0.79, that means, and I'll be honest, because it's going to be an expanded wave 3 after breaking intermediate wave 1, yeah? When I get minor 3 to break the intermediate wave 1. So that has to be a strong one. It's going to be impulsive. For that reason, I believe we're going to get a shallow move in wave 2. So I'll be looking at a correction at 0.05, okay? So end of February, either bottom or top. If it's at 8 cents, look at correction for around 5 cents. And then after this, guys, we're looking at, assuming that correction, we're looking at wave 3 ending at 261 extension, because we really want that move to be strong to break in the immediate wave 1. It makes sense. It has to be bigger than wave 1 usually, right? So we could be looking at this wave 3, 261, and then 361 for wave 5, which means that in the immediate wave it could even end at 30 cents. Okay, obviously then you're going to get 4, we're going to get 5, so we're looking at 50 and then 60 and then perhaps even higher. Okay, so guys, if you have any questions, I want you to go ahead and ask. Okay, that's related to the technical analysis, of course. And as I said before, this is not investment advice. If you have those questions regarding your trading decisions, go ahead and ask, but do not take anything that you see on this channel as granted. Okay, so thank you for watching, and we'll be back tomorrow with another video.